Barbara Corcoran is back at it again. She was on the news wires over the holiday break, and she's basically saying, hey, if we get interest rates to fall 1%, so let's call it from 7 to 6%, it is Barbara's opinion that we will see an increase in the median home price of something between 8 and 10%. As you know, at least it is my current call that I do not see a fall to 6% happening. I think we need one more year of kind of a slow and trudging housing market. We need to heal. We need time to heal the housing market. But she did bring up one very interesting point that I thought we should talk about. And it isn't the price increase. It's people waiting on the sidelines. It is Barbara's opinion that she thinks for every active buyer today, there are 10 people waiting on the sidelines. It's probably hard to guess, but I think it's an interesting mind exercise. I think all of us know, all of us have heard there are people waiting for interest rates to fall. I think we actually have evidence that when rates got to 6.11 to be exact, we did see an increase in demand. And as we rose to 7%, that demand pulled back. So I'm just curious, how much buyer demand is on the sidelines? Because as rates fall, marginal demand will come back. Then, if you're really playing this exercise out, the big question you should ask, or at least I ask myself, is when does supply come back? And again, supply is broken, right? The move-up buyer is broken. They're not listing, they're not buying, they're not trading up. They're not doing what normal home buyers do because the Fed broke the housing market. It is my belief that even if we were to snap our fingers and get to 6%, marginal demand would explode. Will it go up 10x? I don't know. 5x? Probably. Somewhere between 5 and 10x. But what about supply? Again, I think we have evidence. We had 6.11% mortgage rates, I don't know, 2 months ago, 2.5 months ago. And demand was there, but supply wasn't, right? We saw some additional listings and whatnot. So again, I don't think 6% fixes our supply problem. It is my current belief that it needs to be a lot closer to 5%. If for some reason we were to get to 5%, I do believe the move-up buyer would start to trade up. I do think it kind of feels like 5% is the magic number. And frankly, I don't know that we'll see 5% mortgage rates for years. Right? That is my current belief. So again, Barbara's out talking about if rates get to 6%, demand will explode. I think she's right. She went on to talk about prices going up 8 to 10%, maybe. But again, I think the real question to ask is not the demand, it's the supply. And I don't think 6% fixes the supply issue. We are starting to get economic surveys post-election. Post-election surveys are interesting because, again, you have heard me talk to agents, investors, and whatnot about seemingly overnight demand picking up. Now, some of this was demand delayed because of the election, not demand destroyed. Others are talking about just a general vibe shift. So again, we got CNBC Q4 small business survey talked about an optimism shift just since the election. The small business survey had optimism go from 51 to 62. Now, this is on a scale of 100. So an 11-point move is significant post-election. Now, there was some data underlying the survey that really saw a break from Democrats and Republicans. The Republican small business owners had significantly more optimism, where the Democrat small business owners' outlook actually fell. It did also highlight that 46% of all small business owners were concerned about tariffs. When you break that down, 54% were Democrats and 11 were Republicans, 11%. So again, generally speaking, small businesses, small business owners, the backbone of the U.S. economy, generally speaking, more optimistic. We are seeing party affiliation, significant divide, which I found interesting. Also, we got a report from Redfin. Redfin out talking about home tours have boomed post-election. Pending home sales popped 12% year on year. Purchase applications up 12% week on week. Again, these were all conversations you and I were having the last couple of weeks because it did feel like a light switch. Now, the question I have, and the question probably many of you have, is this just a blip? Again, we're in the holiday season, right? It is the holiday. It is supposed to be slow. Is this just the demand that was delayed picking back up? Maybe. Is this the U.S. consumer changing? Don't know. This week, we do get some economic numbers that will highlight what's going on with the consumer sentiment survey on Friday, but more on that in a minute. I do want to ask a quick question. We're now in December. It is December 1st. Welcome to the last month of 2024. There was a great question in our school community that I want to actually ask you as my daily financial news viewers. Thank you for being here. What was your biggest win of November? Just curious. Leave in the comments below, what was your biggest win in November? It could be anything. Doesn't have to be finance. Doesn't have to, whatever your biggest win is. I want to hear about it. I want to congratulate you. I want to see what my community is out there doing. Speaking of our school community, we've got 3 brand new members. I want to shout out Sean, Ken, and Talil. Thank you for being a part of the community. Remember to introduce yourself. You get lots of goodies at level 2 and level 3 that get unlocked, that really incentivizes you to leave comments and introduce yourself. So remember, all of that is there for you. We did see the 10-year note slip on Friday, half-day trading on Friday. Not sure if we'll see follow-through or not. Again, half trading days, between a long weekend is not. I don't know if there'll be any carry forward. So we'll look at that. We'll talk to Dan Berg later today. So we'll figure that out. So the event or economic numbers of the week is number 1 is Monday. We get ISM manufacturing. We also will get consumer spending. On Tuesday, we start our run of 3 jobs numbers. Tuesday, we'll get the JOLTS report, job openings, and the like. We will also get auto sales. Wednesday, we will get our second of 3 jobs reports. We will get the ADP or private payrolls report. We will also get the Fed Beige Book. Again, the Fed Beige Book being a summary of each Fed district. Again, it will be interesting to see pre and post-election. These will all be all the things that I am looking for as what is going on post-election. Every economic report, I'll be looking for that this week if we have any noticeable trends or changes in the data. Thursday, we will get weekly claims. That is a Thursday staple. Friday, we will get the third and final jobs number. Remember, folks, this was a nasty, nasty number last month. It was blamed away because of weather and a Boeing strike. Last month, it had only 12,000 jobs. I'm actually curious. Last month, I called negative. I think I said negative 25,000. I think that's what I said. Might have been negative 50. I think it was negative 25. I wonder if we're going to have a revision and that positive 12 goes negative. Kind of feel like I'll be I'll get that one right if we get a negative revision. The unemployment rate is only 4.1. Will we see any movement in that? And then, like I said, on Friday, we will get a consumer sentiment report. What is going on with the consumers? We did get a rise in the conforming loan limit. This is wild. We need to talk to Matt, the mortgage guy, Convoy, about this. But the conforming loan limit has been rose to $806,500. That's roughly a $40,000 increase. If you live in a high balance area or high cost of living area like San Jose, it is now just over $1.2 million for a conforming loan. Yeah. That rate, that increase is 5.2% year on year. Yes, I was shocked by that. What else do we got? I guess I have one question. It looks like Trump is threatening the BRIC nations. The BRIC nations, if you don't know, it's actually it's a longer list than I had seen. Includes Brazil, Russia, India, China, South Africa, Egypt, Ethiopia, Iran, United Arab Emirates. At least that's the list that I found this morning. Looks like Trump is threatening a 100% tariff on all of those countries in the BRICS. My question for you is, do you think any of those nations that we just highlighted decides to exit BRICS because of this? A 100% tariff on any of those countries exporting goods to the U.S. would basically make them non-competitive in many respects. So I don't know. Do you think any of these countries decides to leave BRICS under threat of a 100% tariff? Just interested. Also remember that this was the best weekend to write offers. So I have to ask you, did you write any disrespectful offers? Just curious. Did you write any offers? I remember, I think we talked about Forrest. I think Forrest, we talked about that story on Thursday or Friday. Forrest wrote an offer. He's a part of the school community. But did anybody else write any disrespectful offers? I would love to hear from it. Don't forget to join school. Our event in Vegas is under 80 days away. Time to buy your tickets. General admission, VIP. We're more than halfway sold out. Don't miss out. We're not adding any seats. I can't add any seats. We're taking it to maximum capacity. So time to sign up, get your hotels, get your lodging, get your travel. I hope to see you all there. Folks, have an amazing Sunday. Again, let me know about your big win of November. I want to congratulate you. I want to recognize you. And thank you for being here. Thank you for being here. Take care. Have a great day. Later.